Good evening, everybody. We're having a little bit of difficulty getting in here tonight. My just about 20 seconds before I was ready to go on, the darn server said it was not making connection. So, anyways, we're going to observe the obvious tonight. And this is where most people have a hard time. When I say most people have a hard time, people have a hard time kind of seeing how simple the analysis of candlesticks are. We knew that they were stopping the selling with a bullish Harami right off the 200. Bounced right up to the T-line. Backed off to the 200. Oops, before I go any further, can everybody hear me all right? I think I better check that since we were having difficulty. Okay, good. All right, good. So here's what we had to consider on Thursday. When it did a Harami Doji right at the 200-day moving average with stochastics in the oversold area, there was two things that we could pretty much project based upon how things opened on Friday, which was if they opened it lower, obviously we had a bearish doji sandwich. If they opened it higher, that told us that the doji Harami was now being confirmed. Our next likely target would be up toward the T-line. So just that simple analysis told us if we started seeing some of our short positions not doing very well, meaning not heading down further, you should get ready to cover because it looked like the market was bottoming. Now, I say this in hindsight, but you've got to look at the reality of what happened with our candlestick signals. A bullish Harami, doji, in the oversold area, opening positive the next day. We know that's an extremely high probability that that is probably a reversal. Now, so there's two things that you want to get gleaned from that observation. One, that you can see that there's probably going to be a reversal, and two, you're prepared to start taking advantage of the fact that the markets are hitting bottom and starting back up, that you don't have to wait 2, 3, 4, 5 trading days or 3, 7, 9% to tell you there's been a reversal. You can see it immediately. And that's the whole point of candlestick analysis, allowing candlestick investors to move quickly and a lot lower risk factor. So the fact that we saw on Friday the pre-market futures were starting to trade up on the open, that confirmed what we should have suspected would be happening. Now, if the pre-market futures were showing that the Dow was going to open up down 100 points, we had another pattern that we would recognize, that our bearish J-hook pattern was being confirmed by a bearish doji sandwich. So the important factor that you want to get ingrained in your visual memory is knowing what should happen based upon where you see your stochastics and what type of signals you're seeing in that area. So you need to watch for the 50-day moving average as a top as resistance. Yeah, potentially. I would suspect that would be your first likely target. Now, what do you see? Yeah, that area or this area. Now, what's that tell us? That tells us we may have at least another day or two of a bullish price move. What's happened in the other indexes? Looks like the Morningstar signal with the best friend gap up again. Now remember what happens when you see buy signals and gap ups. That means a lot of bullish energy is coming back into that trend. So the same scenario over here on the NASDAQ. Morningstar signal. You can see there's kind of a trend channel, which means more than likely they can go through the 50 with the NASDAQ. And then if they go through this area, that's telling us maybe we've got a double bottom in this market and we're starting back up again. Now, this also makes you realize that, and I put this out in the morning comments, that because the market was going down last week for a few days, or in its downtrend, remember everybody was crying recession, that we're heading into a recession. That is, I mean, this is the reason I'm on my soapbox about this, is I don't think I've ever listened to the media be right once in their analysis. That the market is kind of telling us they were still buying. They were buying on, I say they, the market was being bought on any good news, and they were buying it excessively. So it's not like people were saying, oh, things are bad and this good news may be something I should buy. As soon as they heard the good news, they were coming in with both feet, which means the bias is still toward the upside. So this is probably very healthy to see this type of trend pullback, consolidation. Now we could be in the next wave to the upside. I would imagine with stochastics right here that more than likely I think there's enough juice left in the stochastics to tell us we're going right through the 50-day moving average. True, Carl. That's and so lesson number one. If you see something being reported on the news or the financial news stations, that's the last bastion of people knowing what's going on. The people that are in the know knew about that information days, weeks, months ahead of time. So that's why you always let the market tell you what the market's doing, not any financial news stations. Okay. With that analysis, this is what I'm trying to get pinpointed for everybody tonight. This information right here is a candlestick signal. What about the Kareem? What about it? Remember, anything that's going to happen out there in the future is already built into the market. So very rarely do you see things that are moving the market that is a surprise. Now, occasionally you have a 9/11 or something like that that surprises the market. But the majority of the time, whatever is going to be announced by the Feds, by the Congress, by whoever you can think of, by the company itself, the people that are following that company already know that information, and they're making their decisions to buy or sell well before any news announcement. I've read in various areas the market looks forward about 6 months. Pretty much, yes. That's always been kind of the contention, is that you're probably looking at markets, or the market's kind of projecting what's happening out in the future. So whatever news you have today is already being calculated as to what's that going to do, and it doesn't have a very strong effect on what's going on out in the future. How much would you put on the moving averages in your analysis for price action? None. Moving averages are just moving averages. All they are is targets for uh, the people to make a decision. The important factor that you always want to fall back on is what is the signals? Everything else is just a confirming indicator. Yes, because they had, the Feds there was contemplation that maybe they drop it a half a point versus a quarter of a point. But when it did, just did what everybody expected, that's kind of buy on rumors, sell on news. Um, just because it did a doji, remember what the other elements that you have to put into your analysis. Are you following a buy signal? Are your stochastics in the overbought or oversold area? So remember, just because you see a doji, a signal is not a signal unless it's occurring in the right conditions of the market. All this was a doji day. What can we assume about the trend? Right now, looks pretty much like they're still in an uptrend. So anyways, all right, now let's take a look at some of the ones that were showing good signals and patterns. Our recommendation on AJRD was based upon, we could see this trend channel, and here's one thing that you always want to keep in mind. When they gap up big, what's your expectations? Profit taking, and then when the profit taking's over, the force or the investor sentiment change that created that big move is now, after the profit taking, is now kicking into effect. Whoops. There's a fry pan bottom. Now remember, here's a doji. Well, what's the difference between this doji and a doji at the top? Coming out of a fry pan bottom. If it opens positive, what do you got going on? A fry pan bottom breakout. We recommended MTZ. What was going on here? There's your kicker signal, starting the strong uptrend, broke out through the little resistance level, and now what type of pattern do you have setting up? Kind of a scoop J-hook. Now, it opened positive. Here is part of the formula entry and exit strategy. If it opens positive, what do you want to see going on? If they start trading it positive. If it starts backing off, and the reason we know it can start backing off because as soon as it backs off, it's creating a red candle. That's immediately telling you, all right, we don't want to be buying because they're selling right now. But where's the logical place that would tell you the bulls are in control? They brought it back up through where they opened. That tells you the profit-taking consolidation's over. If they bring it back up through the open, you're getting two pieces of information. One, they're now trading above where they opened it, meaning the bulls are in control. And two, you can see the direction it's moving. It's moving back up, not backing off. I've got a bunch of stuff that illustrate. Oh, man. I copied that. I apparently did. Oh. Again, this is why you always have a safety stop. Looks like a good short on PBYI. Where was the safety stop? At the high of the doji of Friday. Because if they came back up through there, what's that tell us about our T-line area? So this is just not anything technical as far as some sort of technical formula. It's just common sense saying if you've got an indecisive day and they can bring it back up through a doji day high that means it's going in the wrong direction. Your probabilities are telling you it's time to close it out. A few others that we own, CVM, just stays with a steady eddy. AERI, another one that's in a big fry pan bottom. And somebody asked today, is this a bullish Harami? Well, it is, but more importantly, it's pretty much telling you they climb back up above the T-line, and the uptrend is in progress. We still have a very informational signal. If they opened it here and started trading it down, what would that tell us? They're still heading down after this signal, and they're not holding at the T-line. There's weakness there that you don't want to be sitting in. You close out the position. POD, there's our classic bobble breakout. It gapped up and did a doji today. So where is the logical place to put a safety stop? Anybody? There you go. RB, I'm going to send you a price. I don't know what it would be. No, not the T-line. You have a gap up doji in the overbought area. Where should it not trade? It shouldn't trade back below the low of that doji. Not necessarily the open of the doji, no. This is the logical spot, because it could open, trade lower, and then move back up. You could have sold 1/2 today, yes. Because now where are you? You're up in the overbought area. They've gapped it up. What's it telling you about your probabilities? Your probabilities are starting to go against you. Now, if you sold 1/2, decent profit, and it continues higher, at least you're still sitting in 1/2 a position, but much less exposed when you're up here in the overbought area where the risk is a little bit higher. Now, here's one that has a logical pattern setup with a doji. Big bullish day was not a real signal on Friday. However, you could see what was happening here. And it closed as a doji right smack dab on the 50. So what's our analysis here? If it opens positive, what's our doji rule? It's going to trade positive. If it opens positive, what magnitude of move do we have potential for? The same as this candle right here. And if it opens positive, what type of pattern does it set up? Our bobble breakout. Where do you think your next likely target could be? All the way up here. At least coming back up here and testing the highs with the 200 being the upside target. Now, match was one that came down, but closed back up above the T-line. What were we buying this one for? Kind of a little morning star signal, J-hook pattern. So where do we not want to see this close? Obviously back below the T-line. Because if it closes back below the T-line, what's it telling us about our J-hook pattern? It's disappeared. Now also, you kind of assume that if the markets are acting well and the fear factor has disappeared, you're probably going to have weakness in gold. So you have to watch to see what gold is doing. You can see it's kind of backed off here. And right now the September gold is trading back below. This is the after hours, opened lower. So it came back up, tried to get back up above the T-line, but after hours it's trading lower. So why is this kind of a sell signal? Look at your bearish left-right combo. That alone is strong enough to tell you, I better start getting ready to close out. Today we closed out Goose because you were in the oversold area and it was trading back up above the open of Friday. So close it out right here. Now it opened or closed lower, doing a doji. Now, do we want to re-enter this trade? Maybe not. If the market's still heading up, probably this is not your best place to be putting your money right now. You probably should be looking at things that are going with the flow, that you're looking for bullish situations. Now this one, if you short it, look at your shooting star, bearish engulfing, closed below the T-line. Today they couldn't move it up. If this one, you can still be shorting this because if it opens lower, what do you got going on? A bearish doji sandwich, making the possibility of coming all the way back down to the 50-day moving average. Now, if you're not in this position and it opens lower, but you see the Dow is opening up 70 points and the NASDAQ up 15 and starting to head higher, you probably don't want to be pushing too hard on short positions just because of the nature of the overall market. Now, something like this, if you were holding the position, you can stay short. But you can see what the trajectory is doing. Possibly flattening out. So, probably want to put a buy stop right back at today's open because the logic says if it comes back up through there, this trajectory is not going down anymore. It's possibly flattening out and possibly turning around. So this is just kind of visual logic that when you can start seeing on a trajectory basis, especially in the oversold area, that they're not taking a price down anymore, it's probably telling you your short probabilities are starting to diminish. There are some that aren't showing that demonstration of any strength. Here's your bearish kicker signal. How long do you stay short on this? You're getting in the oversold area. If I saw a hammer signal or a doji tomorrow, might take off half the position. Oh, I don't know where we find those definitions. I think, Joe, if you go to YouTube, got a lot of short videos out there. Okay, before we go to some new ones, the biggies. The reason we started going after Micron today was bullish engulfing, Morningstar signal. You can see the potential pattern. Wave 1, wave 2, J-hook pattern going into wave 3. So this is one we recommended buying over in the options room. And the benefit of the options room is this was my first pick. And I was concentrating on building that position when I asked in the options room what everybody was buying, because the benefit of an options room or any chat room is that if you've got people looking for the same signals and patterns, somebody might be identifying something that that you'd be looking at, but you're not looking at it at the time. So Nora, who's one of our better traders over in the options room, said she was buying NVIDIA. When I looked at NVIDIA and they were trading higher, I went ahead and started buying also. The reason? Look at our bullish flutter kicker. And what do we know about a bullish flutter kicker? It's one of your strongest reversal signals. And what do we expect after a bullish flutter kicker? It's kind of your bullish flutter kicker on VIPs. Expect a lot more upside. So the biggies like Apple, trading strong, and it was obvious where the strength was starting to turn, right here off the 50-day moving average. When they start buying the big names, and I was illustrating this in the chat room before we closed out today, that if they're buying Amazon, that's a lot different than buying XYZ that nobody might be following. But if everybody in the world knows about Amazon and they're trading Amazon because it's such a well-known name, that if they're buying the known names, that means there's lots of bullish sentiment out there right now. Same thing with Tesla. And here's kind of the analysis of, you're in a downtrend, you're in the oversold area, and you see a bullish Harami. We were long the puts on this one. We closed them out on Friday because logic says if we're in the oversold area and we're seeing a bullish Harami that far away from the T-line, what are our probabilities? Probabilities are that less likely it's heading down. Okay, Nugget. Nugget was kind of an illustration to say that things are probably getting a little bit weaker when the market is showing a lot more confidence. And Labu, kind of a bounce back up. It's not a real strong trade signal. There wasn't a reversal signal, but at least it's telling you if you can find biotechs that look good, at least you know that that sector is probably being bought or it's not being sold off anymore. Improves the probabilities. And Netflix, after the hammer type signal, right about smack dab at the same place it bottomed out before, now telling us again, Netflix being one of the big names, gives you that much more confidence that the bulls are starting to take control if they're all coming back into the big names that are always thrown around. Okay, few good looking charts. Cena. That's a nice scoop pattern. I would expect a 45 degree off of this one. In Weibo, another scoop type pattern. But notice the gap up through the resistance level. Expect a 45 degree off of here. Sienna. How did I have Sienna on here? Wrong Sienna. Nope, that was the right Sienna. Here's kind of a answer. Got a doji sitting right there after a Morningstar signal. That's why I had this on here. If it opens positive, what do you got going on? There's kind of your McMuffin. Where do you think when they've supported here on the 50, where do you think your next likely target? Yeah, I did see Cena. This one's Sientra. But I was pointing this one out because if it opens positive, what do you got? A McMuffin breakout. And where do you think your next target will likely be that everybody else is watching? Salt. Where did they start buying this one? I mean, this is where we can observe the obvious much more clearly than other technical methods. Morningstar signal, doji sandwich, right smack dab off the 50. What type of pattern do you think you got setting up? Wave 1, wave 2, wave 3 coming up into this area somewhere. NPTN, another one that I put on here just to have on watch, because if they come back up through the 200, what do you got going on? There's your bobble breakout, another potential move of this magnitude. So I like to watch the ones that are setting up. May not be buying them today or tomorrow, but maybe in 2 or 3 days from now, you're there's breaking out. Same scenario here. Support, where are you sitting? Right smack dab at a breakout level. That one could have a big price move to the upside. So what we're essentially looking for, obviously, is when that change of investor sentiment is being spurred on by people that are buying as they come through a resistance level or a trading range. That's where everybody starts jumping in. We want to be prepared for it based upon the signal and then getting in much earlier with the confirmation, and then everybody else add to your profitability as they see their breakout level is working. J-hook pattern on IOTS. J-hook pattern. And notice what started this uptrend. There's your best friend signal. Best friend scoop type pattern. Oops, I've lost my place. It is diode. Best friend gap up, gap up. What did it do? Broke this downtrend, broke the T-line. Another wave 1, wave 2. And when they start gapping up, that's a pretty good indication that they're coming in with extreme force. Kind of a fry pan bottom breakout on AKTS. And what was the breakout? The fact that they've held the T-line and then they've come up through the 50 and the 200. I'd watch this one. If they break out through this level, remember what we expect coming out of a fry pan bottom. A big, huge price move. CSIQ. When you see a breakout of this type of nature, when they break out, consolidate, and start back up, this force right here is used once the profit taking's over, in which we can identify much more clearly. Our little doji harami, would that tell us? Probably the selling has stopped. We could have been buying on positive trading on this day and or positive trading tomorrow. So what we're really getting ourselves, or should be getting ourselves set up for, is knowing what a signal or pattern, especially a pattern, looks like, seeing what the signal looks like, and being prepared to take advantage of that information. Doji today, we're not yet in the overbought area. If it opens positive, where do you think your targets are? Target number 1, target number 2. So the reason I'm kind of demonstrating this is we're going to be doing an option trading session. It might be one full day, but I'm afraid there's probably going to be too much information. It might be a 2-day weekend training. And the purpose of the 2 days is we're not going to go through and show the different styles of, what style, no, that's not the right word, what trading strategy should be applied to each type of trading pattern or signal. We're going to go through and make sure that we go over it enough times that everybody completely understands whether a bullish spread, a credit spread, a selling a put spread, all the ramifications, that you're not going to come away confused. You're going to know the difference between each one and where it applies most effectively. Because that's where a lot of people get lost, that they have a hard time, deciphering the different methods and which ones are the best to be used for a different price move and a different time frame. It will be out, we will probably start advertising it. What is today? Today's the 19th. Yeah, you'll have plenty of time. I think it's going to be the first week in September. First weekend in September. Yeah, don't worry, you'll have plenty of reminders in the chat room. Okay, so ITRA, kicker signal, consolidation, J-hook pattern. You can be buying this one on positive trading with your doji sandwich breakout. SPWR, same scenario. We saw when to be buying. Here's our doji sandwich. Shooting star, indecisive. Where was our exit? Right here, because if this is in an uptrend, they shouldn't be gapping down below the previous day's open. Now what do we got going on? There's our Morningstar signal followed by a doji. If it opens positive tomorrow, what type of pattern do we have setting up? McMuffin. There you go, Cat. Good one. You have a McMuffin, and what would that McMuffin be telling us? There's more upside, and if there's more upside, what's that telling us about this? Wave 1, wave 2, going into wave 3. Okay, so there's still a few shorts. I'd be less optimistic about going after them. You can see AZUL is still in a downtrend, likely to fill this gap. SPWR, going backwards. Let's see. For myself, see a McMuffin setup. Yes, that's exactly right. RareX has come up, bounced up. What did it do with the 50 and the T-line? It failed. So if it trades lower from here, what type of pattern do we have setting up? Bearish J-hook, bearish J-hook. There you go. Blue ice failure. A bearish J-hook that you can see. Remember, a bobble pattern is a J-hook pattern that is much more defined when it comes up, hits a resistance level, and then comes up through it the second time. A blue ice failure is when it falls through that support level, comes up, finds out that is acting as a resistance level, and now where do you think your next target? Wave 1, wave 2, wave 3, or the blue ice failure. If you've drowned, you're probably going to the bottom of the pond. EVA, if this opens lower, that's kind of your dumpling top. Get ready for them to really pull the trigger, or pull out. I don't know why I have this one. That's not the right one. I eyeball. That might be the right one. Another one that if it did a little left-right combo failure, filling the gap right back here. So if you don't want to have all your positioning in long positions just to have a safety factor, there's still a few good short positions to put in the portfolio. And the reason, even if I am ultra bullish, I always like to have one or two short positions on, just in case something surprising happens. They act like a buffer. I mean, they'll act well when the market's pulling back and hopefully produce some profitability if you're trying to get out some of the long positions before they pull back too much. So right now, putting some I guess historic analysis into what the market might be doing is, if you see them talking about recession, the market is going to do great. Because as long as you got people out there trying to talk down the market or having fear, the market will act strong. It's when everybody thinks everything is great is when you start getting ready to come out of the market. Climbs the wall of worry. Exactly, yes. So what baffles me is you only get a few people that say as long as they're got the fear factor out there, there's still a lack of strong bullish talk, the market goes up. I mean, that's happened decade after decade after decade, which unfortunately I've experienced too many of them. But As long as there's worry out there, the market will probably continue higher. Okay, the most important factor tonight was this right here, recognizing where where did the buy signal occur? And that should be our primary analysis. And when I say primary analysis, when I turn on the TV every day and have a financial news station on, I immediately put it on mute because I don't care what they say. I'm just looking at the headlines of what everybody's talking about during the day. Bill, yes, the administration says we've got a good economy, which, if you look at the numbers, any one of those numbers, full employment, meaning more people working than ever before, by itself is usually a strong factor. Or the lowest unemployment rate in decades. Sentiment rating of small businesses being very strong. So to have that many good factors still kicking away in this economy, to think we're going into a recession. Most recessions are usually, discovered well into the recession. So trying to predict a recession is kind of a moot point. Okay, again, this is the important factor right here, is being able to say, all right, I have a potential of a reversal. It opened positive. I've got to go with what the signals have told me over the last 400 years, that more than likely investor sentiment has changed. All right, so with that, are there any general questions on candlesticks? The most constructive result that you want to get out of candlesticks is if you can see what type of signals and patterns are forming, it puts you way ahead of everybody else of not hesitating to get into a position. Are McMuffin and Doji sandwich the same? The Doji sandwich, which one were we looking at that had a Doji sandwich is a bullish day followed by a Doji, followed by a bullish candle, the simple Doji rule, that it's going to move in the direction how they open it after a Doji. That's a separate signal. It's when it's in combination after a Morningstar signal. Remember, a Morningstar signal is one of the 12 major signals. Now, if you combine the Morningstar signal, which is a bullish reversal, and a Doji sandwich, which is telling you there's going to be more upside, when you combine the two as a McMuffin, which is a morning sandwich, that tells you the probabilities of more upside is extremely strong. So if you see a signal, the confirmation is an open in the same direction. Yeah, that's your signal. If I'm ready for a confirmation, I want to see this open positive the next day. If it opens down here, that's not telling me I've got any signal. So when we saw the Morningstar signal from Friday, or even going back to Friday morning, when we saw the Doji Harami in the oversold area, if they opened up positive, which way do you think we were moving? Moving positive. After a Morningstar signal, if it opened positive, what was it telling us? They were confirming the Morningstar signal. That's right. Breakfast is a big deal. Got stick sandwiches, got Doji sandwiches. Do you look at the futures, Kim? Yes, that's exactly what you look at. When I get up in the morning, I come down and I turn on, I've got a big screen TV right here in the corner of the office. I turn it on and I see what the futures bugs are, which is the futures down in the right-hand corner. So if I think the market should be confirming a bullish signal, if I come down and I look at the pre-market futures and it shows that the Dow's going to open up down 100 points, well, that's definitely not confirming the signal. On the other hand, like this morning, after the Morningstar signal of Friday, we got up and we saw the market was going to open up 230 points. That was pretty much confirming what we expected coming after a Morningstar signal. Beyond McMuffins. Beyond McMuffins. Bill, you got me there. Okay. All right. In the next few weeks, we're going to have a full breakfast burritos. Okay. Again, those people interested in option trading, we're going to do the same thing that we did in the top rank signals and patterns. There's a number of them, but if you specialize in 3 or 4, now what that means is you're not trying to fit your option trading into a pattern. You're trying to recognize what pattern you're looking at and then fit maybe 3 or 4 different option strategies that may work the best, or the option strategies that you've learned, which one is the best for that trade. RB, I only did a straight call because I didn't have time. I just went and bought the calls because I saw it opening up. It probably would have been much more prudent to do a spread, which you still have time to do. I mean, this may just be the beginning of some of these price moves. I'm out the first Saturday weekend of September. CB, where I got to get with Pat to find out which day we actually are doing it. McMuffin consists of 5 candles. Yeah, pretty much. Sometimes it's 6. Sometimes you get a Morningstar signal, then a bullish candle after that, then your McMuffin sets up. But it still illustrates the same thing. Probably heading higher. Okay, because Jim, go ahead and do the double line. And in 3.8 seconds, do the next double line. Helen of Troy, you can get ready to buy this one because of the best friend gap up. Mercy, another one you can be buying with the kind of a wave 3 breakout. BC was acting well today. This one, if you're buying it on maybe a doji sandwich setup, at least you're suspecting that it's coming up here to the 200. If it comes up to the 200 and breaks out, there's your bobble breakout. ATVI, I'd be buying this one on positive trading, same scenario as the markets themselves. A Morningstar with the doji gap up, your best friend here, then another gap up. Now you're right here at this breakout level. You've come back up through the moving averages. If they start trading positive from here, I'd at least suspect coming up and testing this level, and then possibly this level. Barrick's Gold has to open positive tomorrow to stay in it. Otherwise, you've got it breaking down below the T line. Here's another doji sandwich potential breakout. Positive open. If they support off the 50, there's your next target. And KPTI. Another one that had the potential breaking out today, but failed. But if it opens positive tomorrow, you can be going after it with your doji sandwich breakout. SMSI. That one failed. If this one opens lower tomorrow, you close it out. It needs to open positive and head up immediately to get back up through that breakout level. Otherwise, you're still caught in a sideways type mode. EP or ENPH, another one that has a Morningstar signal, little scoop type pattern. Stay long on this one, and you can still even be buying it. Ferry, just stay long. Now notice a little bit of enthusiasm up here. Remember where most people buy, they buy enthusiastically at the top. Have a sell stop somewhere, like halfway down that candle. It should continue in an upward direction. Weight Watchers, a bullish Harami right smack dab on the 200 and the T-line. You can be buying this one on positive trading, or expect positive trading, but don't buy it until it breaks out through that little resistance level. I'd rather be a little bit late and know that it confirmed that a resistance level is not acting as resistance than trying to get in a little bit early and then having to watch to see whether it's going to break through that level or not. And that one you can get ready to buy and see how it's supported with the inverted or indecisive signals right there at the 200. Apache, Morningstar signal, you can buy this one. Now, got to remember, you're in a downward, got a reversal, you came up through the T-line, you still have to break this downtrending channel with the suspicion that you're heading for the 50-day moving average. We did this one, CNX. I'd stay long on this one. Not a real dynamic chart, but it's heading in the right direction. It wouldn't be one of my first choices, but I wouldn't be afraid to be buying it. BlackRock, if you're long, you can stay long. Kicker type signal on Friday. If I was buying it, I'd be buying it if it came back up through today's high. Can't tell what color the chart that is. No, it's actually a positive. No, it's a bearish chart. Bearish candle. I'd be buying this if it came back up through today's open. Ranger, not a very exciting stock, but it's heading in the right direction. It's not going to make you a whole heck of a lot of money. It's an institutional trader. And Labu, moving in the right direction, but I'd probably be more apt, not a great chart, but at least telling you the biotechs are picking up a little bit of strength. Workhorse, you can buy this one, especially if it comes up through today's high. Precision Drilling, Morningstar signal, you can buy that. Just make sure your volume is pretty hefty. AMISIS, or AMRS. There's your bobble breakout. Stay long. On a Morningstar signal, was the first two candles a Harami? If so, would you buy the positive candle on the third day? No, on Morningstar signal, you have a big down day. Then you have a day of indecision, which could be a doji, a spinning top, an inverted hammer, a hammer. And then the reversal of the third day takes you back up more than halfway up that first big bearish candle, or the last big bearish candle. So this isn't quite a Morningstar signal. Now, if this right here had been down here, yes, that would be more of a Morningstar signal. That's Apple. Right now, just stay long. Service Master, there's kind of a doji sandwich J-hook pattern. Wouldn't be afraid to be buying this one on strength. And AJRD, recommended because of the J-hook type pattern setup. And this was a perfect example today where they opened it and started trading lower. Then when it came back up through the open, that's when you started buying. AMGN, J-hook pattern, that's kind of your morning star signal. Big down day, a day of indecision, usually near the low end of that range. And then the third day closed more than halfway up that candle, and it was also creating a J-hook pattern. Trade desk. This one you can get ready to go short. If it opens lower tomorrow, your bearish doji or bearish left-right combo failing at the T-line. Johnson & Johnson. Very unexciting stock. If you like it, you can be buying it. You're just not going to make a whole lot of money with it. And Microsoft, another one that you're not going to make a whole lot of money with. If you like it, you can be buying it. Probably your first target is right in here. I've never traded Microsoft because it's too big, too much of an institutional trader. It doesn't move around a whole lot as far as percentage-wise. Lockheed, all you can do here is stay long as it stays above the T-line. Schlumberger. This one you can be buying on positive trading with the expectation of coming to fill this gap, which puts you fairly close to the 50-day moving average. SPXL. Oh, that's the SPY or the S&P. Yep, I would suspect you want to get out of this sideways range. I mean, this is all junky in here. But you do have a buy signal, pop-up failure. Another buy signal. That should be your double bottom. Yeah, you could buy somewhere right in this range. Breaking out through. So 70.25 would be safe. Okay. Remember this day. Remember what they did here. That told you that the bulls are taking control, and that's exactly what the candlestick signals tell us. Okay, everybody, we will see you bright and early in the chat rooms tomorrow. We'll see you then.